The basis for them is very simple. Central banks have been stacking up gold, so there is a gold spurt in gold. That's one. The second is they expect interest rates to remain fairly high. Remember that we expected interest rates to taper off in the second half of the year, but it doesn't seem likely. That's the second reason. I think the third reason that people are pointing out is whenever there is a recession, there's flight of capital to safety. There's still recession in the horizon. There was a technical recession that was called out by the markets in UK. So all this points to people moving to safety havens, and safety haven is a gold, which is the indication for the potential elevation of gold to about $3,000 an ounce. As far as oil is concerned, remember that there's a lot of there's been supply reduction by the OPEC and OPEC plus countries. That's number one. Number two, there's also been disruptions that's been happening, and you will continue to see disruptions in the Red China Sea, because there's nothing that is, at least for the next 12 months until the elections happen in United States, there's nothing that is kind of expected in terms of resolution to the crisis in the Persian Gulf. And third, I think that people still believe that all the reductions that has happened, which was pointed out by one of the CEOs of the oil companies, that what we are living with is what we extracted 50 years ago. So there is also a supply crunch, because a lot of the licenses, under the pretext of the energy issues or energy crisis, was cut off. So all this points to a crisis in the pricing, and which is what is the Citibank analysts are pointing out, saying that don't be surprised if we go back to $100.